scary. It's scary, Bix. These are scary, scary, scary times. And the fact that they're jacking around with the price of gold and silver, which should be the island of safety, maybe that's why the central banks keep buying it. Maybe that's why the exchanges keep getting drawn down upon by the big sophisticated money who is using the ridiculous make-believe price as cover for what, protection or de-dollarization or just to get out of harm's way of what's coming.
Andy Schectman, currently serving as the president and chief executive officer of Miles Franklin Precious Metals, is a prominent figure in the world of precious metals. Andy Schectman shares his astonishment at nearly 20 states recognizing silver as legal tender. According to the 10th Amendment Center, Utah Legal Tender Act, 2011, and Wyoming Legal Tender Act, 2018, already recognized gold and silver as legal tender. With drives to establish state-backed precious metal depositories throughout the country, this could spur fresh momentum in the bull market for gold and silver. Meanwhile, Andy shows his concern about the current state of the precious metals market while highlighting the rapid drawdowns on exchanges, which have hit their lowest levels since the silver squeezes. The silver market saw an even bigger short squeeze as net positioning was even more extreme than gold. However, like gold, silver couldn't hold its gains as prices dropped below $25 an ounce. The disaggregated report showed that money-managed speculative gross long positions in Comex silver futures rose by 6,980 contracts to 43,477. At the same time, short positions fell by 8,116 contracts to 26,998. Now we are presenting you the glimpse of Andy Schectman and insights from his recent interview with Bix Weir. Before we continue to delve into this discussion, we request you to subscribe to our channel and activate the bell icon for timely updates.
Well, I never thought I'd see close to 20 states recognize silver as legal tender if issued in the form of a coin, past or present, from a sovereign mint. Now, few of the states say U.S. only. Quite frankly, as an American, I think by far it is the best choice. We can talk about the fact that most people have never seen a gold or silver coin ever before in this country. So having something that is recognized as legal tender in this country, I think, is a huge deal. Look, there are reasons to buy the American Eagle coin. For me, they're the most sought after, at least as a business owner. It's what I pretty much buy exclusively: American Eagle gold, silver, American Buffalo gold. I think that they're the most sought after coin in this country. And if we see a transition back to all of these states, like we're seeing, that are passing laws like Missouri and Kansas and Alaska and Idaho and Texas and Nevada and Wyoming and North Carolina, Oklahoma, Arkansas, the list goes on and on. These states are actually allowing gold and silver to be legal tender for all debts, public and private. And I think in that environment where there is pushback to central bank digital currency, where there is acknowledgement of gold's role or silver's role as money, then having an American Eagle, I think, will be worth paying a little bit of an extra premium right now. Now, I wouldn't have said this over the last 3 years when the premiums were out of sight. But right now, they're close enough to the rest of the sovereign coins where I would 100%, I wouldn't even think twice. To me, my favorite choice would be Silver Eagles right now. Silver going forward, you can see an acceleration not only of the drawdown of the exchanges like the Shanghai Futures and the Shanghai Metals Exchange to their lowest level since silver squeeze. Same thing with Comex, same thing with the LBMA, same thing with the ETFs being backdoored. And now they're trying to, in an opaque fashion, go right to the source, disintermediate the process, and make it a much more private affair. So yeah, it's one of these things where supply, I think, I've always said supply will become something very difficult. We've seen that over 4 years, certainly, with whether it be the inefficiencies of the U.S. Mint or any of the difficulties we've had over 3 years securing product. But you can see that it's being bled down from the top on down. And when they make an overture to actually go to these conferences to talk to mining executives about securing their future production, at some point it goes from normal where you can go to a company like mine or a local coin shop and buy stuff to just the blink of an eye, it switches off. And a bail-in would be a perfect example of how that happens, because we added 14,000 clients in 45 days in March and April when Silicon and Signature failed. I've never seen such anxiety in my life. We were working 18 hours a day, all of us. And that's with banks being bailed out. You see a bail in, and very quickly people's eyes will open. They'll start searching out guys like Big Swear, who have been talking about silver forever, because these people haven't even thought about gold and silver. They haven't even thought about the ramifications of where do you put your money when the bank is collapsing and stealing, in essence, or bailing in your money where you are an unsecured general creditor. And then, to your point, it will feed upon itself as everyone runs, which collapses the banking system, which pushes everyone into the big commercial banks, which just collapses the regional banks, which spikes interest rates. This is a snowball, a self-fulfilling prophecy. I do think that will come, and that is, to me, what ignites the fuse of supply and demand really blowing up.
Andy Schectman shows concern about the aftermath of the 2008 financial crisis and the subsequent enactment of the Dodd-Frank law. In 2008, the bank made a loss of 20 billion Swiss francs, CHF. This was the largest loss ever recorded by a Swiss company. It becomes evident that the banking system faces risks, underscoring the significance of comprehending concepts like bail-in. In March, the prospect of yet another scandal and the announcement by a major shareholder that it would not provide further investment led to a run on the bank by depositors and investors already made nervous by turmoil in U.S. markets, notably the failure of Silicon Valley Bank. Systemic risk scores for 7 U.S. banks shot to their highest ever positions in the second quarter, driven by trading book expansion and tilts to stopgap funding. The average systemic risk score, as determined using the U.S. Federal Reserve methodology, across 24 banks analyzed by Risk Quantum rose from 237 basis points at the end of March quarter to 240 BP 3 months later. Let's get back to interview.
With the banks, the thing that most people don't quite grasp yet is that at the end of the 2008 financial crisis, the Dodd-Frank law was put into place. And this was put into place so that the mistakes from '08 wouldn't be replicated or duplicated again down the road. And here we are down the road, and we see banks fail. And what did Dodd-Frank say? Dodd-Frank said that bailouts wouldn't be legal. And yet Silicon Valley Bank and Signature Bank were bailed out. And that was why there was such outrage from the Republican senator from Oklahoma, who questioned why this was being allowed when the law said it wasn't. And, just a side note to that, by the way, not enough light has been shed upon the fact, in my opinion, that when there was another subcommittee hearing, Republican subcommittee hearing, or House subcommittee hearing on Silicon Valley Bank, and for 3 years, 10 accounts held $14 billion in checking accounts for 3 years in Silicon Valley Bank. And that's with interest rates at barely above zero, with FDIC insurance of $250. You have 10 accounts with on average 1.4 billion in them each for 3 years. Now, where the hell was risk management of the corporation, of the bank, and of FDIC? And why were these banks not bailed in the way that Dodd-Frank says? Well, Janet says they are too systemic, which is just a bunch of bullshit. They should have lost everything. They should have been bailed in. That's what the law said. And that's what people are missing, because Silicon Valley Bank, Signature Bank, all of these banks that, the one in Kansas, U.S. Bank,
Heartland Tri-State.
Yeah, all of these banks that have failed have either been eaten up by J.P. Morgan or have been bailed out by the FDIC and the Fed, supposedly not at the cost of the taxpayer. But what I'm getting at is that when you look at the banks that are hanging on by a thread, like Schwab, like PNC, like all of these banks who have huge amounts of money borrowed from this new short-term emergency lending program by the Fed that's all due back in about 6 months. Some of them, like Schwab, I believe, has borrowed as much as 130% of equity. There's some banks that are just barely hanging on by a thread. And as the banks continue to sell their assets to meet redemption requests, it pushes rates up higher and higher and higher. It's a self-fulfilling prophecy. It is going to obliterate the banks. But what no one is remembering, or not enough of us, is that the banks will be bailed in. And they're going to make a point of that happening one of these days. And when that happens, the amount of anxiety and chaos, I think, will be unlike anything we've ever seen, because that's something that most people couldn't even fathom. Since we were little kids, we're putting nickels and dimes in a piggy bank, thinking that it's safe. We put our paychecks in the bank because it's safe. Yeah, when you invest it in stocks, that's risky. When you invest it in bonds or gold or silver, that's risky, right? You put it in the bank, it's not, until it is. And I don't think people grasp that yet. In fact, most people I come across day to day, Bix, they don't know what bail-ins are. They have no idea. And that is when I think it really gets crazy in this industry.
Reflecting on the insightful observations and concerns regarding the precious metals market, it's clear that these elements hold a crucial place in our financial landscape. Gold and silver, with their enduring intrinsic value and stability, have historically been reliable assets. Given the changing landscape of precious metals and the uncertainties in the banking sector, careful financial decision-making is more vital than ever. How can individuals safeguard their assets, including silver, in an environment characterized by rising systemic risk scores? Share your thoughts in the comment section below. If you find this video informative, don't forget to show your support towards our channel by giving this video a thumbs up and subscribe to our channel, and turn on notifications to stay informed about our latest videos covering more interesting topics. Thank you for watching.